Welcome to the Stock Market Morning Prep video for Thursday, September 4th. Mixed picture yesterday in the markets. Dow Jones up 10, Nasdaq down 25, partly due to an Apple downgrade, S&P down $1.56, and a Russell down $7.27. So a mixed picture, relatively quiet. It's been quiet all week. A couple things coming off of a big holiday weekend. Market participants starting to come back into their trading desks. You're really going to see a big pickup in volume, I would imagine, and hopefully next week starting on Monday. We do have that non-farm payroll as well on Friday, so a lot of bigger positions that are going to be squaring off and adjusting positions. Probably not going to happen until after that number does come out. So really eager to see what happens on Friday. Now, as we all know, the market's at all-time highs. Hit our extension targets of, we had that inverted head and shoulders at 2000 in the ES. We had an extension of 1272 of 2006. We actually exceeded both and went up to 2011. Now we started to kind of fail a little bit at these areas, which is to be expected. Markets rallied big time for the last 14, 15 trading days. So it is to be expected to have some sort of a break. Now, do we roll over? Do we continue its move higher? Well, there's definitely warning signs, as we all know. Also, we do have some major geopolitical headlines that are coming out, and that may eventually take hold here. So we really have to watch closely. Crude oil rallied hard yesterday, down in the pre-market now, but keep watching those tensions that are coming out of Eastern Europe, Iraq. You have to really pay attention because at any given moment we can really move down quickly, and that's why I'm not interested at all to be taking any overnight risk. Again, unless they're options, they're well defined. But if you're looking to swing trade, really this is not the environment, and really hasn't been the environment of taking a lot of risk in the overnight. But again, it's been proven that the markets have been favoring the buying the dip mentality, and if that's good for you, then that's fine. But I'm not looking to do any type of swing trading, at least at the moment, until we get a decent correction here. So what do we got? Well, you know, we wanted to see a push back up into this McClellan oscillator, which I'm watching very, very closely. We have the Bollinger Bands here. So here's the 20 on a daily, hitting that 20 now. This, to me, looks like a pretty much of a flag, so I think maybe we try to get up one more time, and then I think that would be the cue to start looking for areas of weakness to start shorting, if not the market, maybe some weak stocks that have bounced on this move from the August low. So that's something that I'm really interested in looking to do going into September. We also have a couple of things. We have stocks above the 50-day moving average, which I've mentioned, have not really participated. So there are many, many stocks that have not participated in this move from the August lows. Quality stocks that are in the index. Apple has rallied immensely coming into this new product launch that's coming out next week. And then now they're starting to take profits, and that's when you have that selective few that are holding up the Qs because it's heavily weighted, and I believe it's like 38% in the Qs itself. So that's a big, big weight on Apple to hold the Qs up, and that's why on that downward move we had prior to the August lows, the Qs did relatively well. We also have outside day reversals in a couple of indices, which I'm going to show you, double tops, which I've showed you already. So it's going to be interesting to see what the market does. And I do think if the markets do break higher, I think that'll be a pretty decent shorting opportunity. Again, markets just cannot go straight up. But what we want to do is when that time does come, we want to get a trigger, and then we want to look to short weak stocks that have rallied off its lows, and that would usually continue to move lower again. Okay, a couple things on top of that is let's take a look at the breadth. The advanced decline with volume, as you can see, this has been here pretty much since March. We tried to break out and failed again. Now we're headed back lower again as the markets are just hanging above this area. So this is also something I'll be paying close attention to. Now, yesterday I mentioned that the builders have been basing. I'm going to show you a couple of charts, but I wanted to show you the ITB, the home construction. I like the lumber prices that are holding up in this area here. Now, lumber could just literally start to dump again, but if lumber can continue to rise higher, and get above price action on the home construction, then I think we might have a trade here. Now, Toll Brothers reported great earnings, and they just basically took profits. And I think that may be the theme here. That may be the theme, but I just wanted to show you a couple before we start going into the indexes. Now here's Toll Brothers on a daily chart, and you'll see this the same. Now this is the area here. As you can see, this consolidation area. Here's the mark of 35.86. Did not break, so there's no trigger. Remember, no trigger, no trade, and this is what I'm looking for. Now we have this consolidation area here. I just wanted to just get my trend line back. You'll see what I'm talking about. They're pretty much all the same. And here's Lennar. Lennar, same thing, as you can see. So this is what I was eyeing. We had good lumber prices, and all of a sudden they just kind of sold them. And this is a big reversal candle, an ugly candle, no less. So there's no trade in the builders at the moment. But keep an eye on them because they're decent trading stocks if you can get a hold of them. And here's DH1, as you can see here. But again, based and then sold off. Now, I believe KBH was probably one of the better charts. Let me just take a look here. KBH, yep, there we go. KBH, one of the stronger ones, as you can see here. Nice base building from off the lows, but now instead of breaking higher, it broke down. So still want to watch the builders, but now it needs a lot of work here. Big outside day reversal on that whole sector. So possibility that we might be testing the lows here. But let's just take a look at them and keep an eye on them as the days progress here, because there are an interesting group to trade. All right, so let's get back to the index. We have a lot of the commodities, precious metals, soft commodities, grains, all moving lower based on a stronger dollar. So we do have the next big extension is going to be, here's the 2618 and then the 1272 off the bigger move way back here, back in this area here. And I am looking for that to tag. And remember, if the markets get a little nasty, I think you're going to see the dollar index really start to escalate as well and hit that target. So that's what I'm looking for. We've got another big upside target here around 83.72. So another 80 cents, or even you want to call it a buck or so. I think that would pretty much put a cap on it, at least for now, unless the markets really become wild. But we won't know that until the days are starting to happen here going into September. All right, so here's the dollar. This is what we're going to look at, that upside target. So that's obviously affecting gold prices, precious metals, obviously grains, and of course crude oil. But crude is going to be an interesting animal here to be watching. Okay. All right, now let's get into the index. We have the ES daily chart. As you can see, 2000 was the upside target in that inverted head and shoulders that we've identified weeks back. We've actually hit and exceeded the target, and now we're kind of basing here. Believe it or not, this is not bearish at all in any way stretch. That's why I don't want to be looking to short the market just because. Price is up there. We want to see this market start to break down. Obviously, the first target, if it were to break lower, would be, and coincides nicely, is that center trend line support, and of course the 20-day moving average that's right underneath it. So that would be your first target of 1983, and then we would reevaluate. But as you can see, we have a lot of moving average support just below, and then of course that 1618, which now acts as a decent support area. That's going to be also identified. But let's just take it one step at a time and see if we can pop up. We can get a little bit higher and pop up and fail again. Then it might be interesting developing on the short side here. All right, and there's that, as you can see, that we identified that head and shoulders straight up, literally vertical. I just think that you have more risk up at these areas here at all-time highs than at least a pullback, maybe a 38 or 40, 50% pullback, would be more enticing to look if you're going to look to start buying a dip. But I wouldn't be looking to be chasing at these areas here. Diamonds double top. We mentioned that yesterday and all of last week. So right now, having a little bit of hard time getting above it. Again, upside target, if it were to break higher, would be here. But now you have to deal with that lower trend line of that trend channel that we've had and developed pretty much most of the summer here. Okay, so let's keep an eye on that double top. And if we do get a double top, then look for some lower prices. But we got to get a confirmation. We got to take out in the diamonds 170 really needs to be taken out. So let's look for that 170 mark. All right, and we had the transports. Again, same thing. Double top in the transports. We took it out yesterday, and then we took it out, the day before and yesterday, but failed and right back below that double top area. Remember what I mentioned. every time it makes new highs, we sold off. New highs, sold off. So we have repetitive pattern here in place. And that is probably what should be happening here. So let's see if we get a decent move lower. And remember, though, we have a lot of support here in the transport sector. So if the transports do well, pretty much it is our leader. Most of the indexes will follow, okay? But if we have some weakness in the transports, and then other leaders in our indices that we follow are following suit, then you have to be careful. And one of them would be obviously the IWM, which now is really starting to be a thorn on the bull side, I would imagine. We did get that from high to low here, that short-term pullback, that 1272 was met. However, the larger move from high to low, 618%. We did break higher for 2 days, but now we failed and we're back below that. So that 618 is holding true from this bigger move lower. So let's see if we start getting a rollover in the IWM. But again, as an analyst and a market technician, you cannot ignore the small caps not doing very well. Okay, that's something that's interesting developments, and it's obviously been pretty much most of the year until it played catch up from back here. But you have to really watch this, because if this really starts to move lower and you see some real market weakness, I think this time may be something different again. So we just gotta watch everything, put everything in perspective is what I'm saying. Lastly is the Qs. As you can see here, Qs actually hung around this area, exploded higher, and then again, partly due to Apple, it's heavily weighted in the Qs. And also we had Tesla rolling over. A lot of the bigger cat high beta names actually did well early on and gave it all back towards the end of the day. So we really had a little pop up pretty much in the morning, and then we quickly sold off, and then we kind of went stagnant the most of the day, and then we did get a little bit of selling going into the close. So interesting to see that the markets did not follow again. So let's keep an eye on our indexes. Let's keep an eye on our levels to watch and get the clues. Let's see what happens here, because if we can get a decent move, one more push higher, and then that ultimately fails again, that would probably be a good signal to say tighten up your longs and let's start looking for some shorts. Right now, that hasn't been the case. Non-farm payroll numbers come out tomorrow. Again, be careful. I wouldn't be so heavily long and or short because that could be a game changer. It usually is, but the last few months really hasn't done much to the markets. But again, bulls wanted to see numbers like that, so our Fed chair Janet Yellen can continue to print money. Okay, so I would expect slightly lower, maybe choppy day today going into tomorrow's non-farm payroll numbers. Remember, that does come out at 8:30. We will have another report again tomorrow morning. Have a great day, everybody, and we'll speak to you then.